In this episode, you're going to be learning all about digital assets. If you guys have been on the sidelines when it comes to crypto, such as Bitcoin and Ethereum and all those things, I have brought in an expert that's going to give you the foundation to get started to where at least you make the smart moves in the beginning. And maybe as the investor semester goes, this might be an investment for you in the future. So stick around for more.
Hey, this is Bridger Pennington,
Cody Hoffine,
Chris Novel,
Alex Casala,
Cody Barton,
Clay Rockwood, Matt Porcaro,
Tanisha Spencer,
David Olds, Drew Hitchcock, and you're listening to the Investor Semester Podcast with Jeremy Davis.
Hey everybody, welcome back to the Investor Semester Podcast, your number one spot for sniper-focused trainings and hands-on partnering for your cash and your creative finance deals. If you're listening to or watching this podcast right now, you can join our private community for just $1. Go to investorsemester.com to join. Before I get into the speaker themselves, I just want to really do a quick little disclaimer. I am not a big supporter on scammy pitches and stuff like that. And I know that there's a negative connotation when it comes to crypto. And my speaker today, Dane, is absolutely someone that I trust. He's been someone that's been a friend of mine for a long time. And so by bringing somebody onto this stage, I want you guys to know that this is only an opportunity for you guys to get educated on different possibilities of gaining wealth through different types of real estate. That while I'm a big supporter of long-term growth through rentals and, assets like that, I also want to be more asymmetrical and allow the conversation to occur for things that might be looked at as more risky or more gambly. But if you're guided by the right person, I feel that digital assets and cryptocurrencies can actually be a right investment. So guys, I want to welcome Dane Bollwinkel. Dane left the corporate America world and built a multi-seven-figure real estate investing company. And now he has a focus on helping investors reach their financial goals by combining crypto with real estate, oil and gas, and business. So guys, let's welcome Dane Bollwinkel.
Thanks for having me, Jeremy. This will be fun today, man.
Yeah, absolutely, dude. Again, guys, I mentioned that Dane is somebody that I trust. And to be very clear, when I moved to Utah and I started my real estate business out here in Salt Lake, Dane probably doesn't remember this, or maybe he does, but he was the very first person that I reached out to that said that he would go get lunch. And when it's funny that when you become a real estate investor, you typically have a lot of newer investors that are going to be offering that same offer. Like, hey, can I take you out to lunch? Can I take you out to lunch? And most of the time when you start to get to a higher level where you're running a really successful business, you find that it's not very fruitful. And I'm going to say right off the bat that Dane was the first person to take me out. Or actually, I took him out to lunch. We went to a place called Cubby's. We had a really great conversation, a really great meal. And by speaking to him, he gave me the confidence that I needed to really get started in this business here in Utah. So Dane, I want to say just firstly, thank you for giving me that opportunity, whatever that was, 5 years ago, 6 years ago,
man,
something like that?
I'm a sucker for lunch. So you can take me out to lunch anytime. If you're in Utah or Puerto Rico, I'm around. You want to take me out to lunch. All you listeners out there, I am a sucker for lunch. No, but in all seriousness, I love doing stuff like that. I think it's important to give back. I think it's important to kind of remember where you came from. A lot of people start to get to a place where they're making money and then they don't, and then they don't want to give back. And I think that's frankly a problem. I really do. I think it's kind of like the law of reciprocity. You get what you're willing to put back out there. And I think part of that ought to be giving a hand up, not a hand out type of thing. And I believe in that. So I think it's fun.
Love it, man. Love it. All right. So why don't you, before I get into some questions, because obviously, like I said, this is actually a learning lesson for me as well. I have been sitting on the sidelines for many, many years when it comes to crypto. And I will admit FOMO is strong. The, fear of missing out has hit me a number of times. I think at one point I invested in crypto for $150. It was in my Venmo account. And it's hey, did you know that you can now invest in cryptocurrency? So I was like, screw it, $150, here we go. And I don't know, I don't think I've made any money from that yet. I'm not a multi-billionaire, but yeah, obviously I've got a lot of questions because this is own education for myself to be more familiarized and not be so scared of this type of asset. But why don't you give me a quick rundown? Again, you and I met and we went out to lunch, but why don't you talk about how you came from real estate and what brought you to this world?
Yeah, sure. So I was somebody that in the beginning, I won't bore you with all the gory details, but I was absolutely raised in a home where, the whole American dream of a safe job and a good education, that was what my parents promoted. And it's actually hilarious they did thinking about it now because my dad has been an entrepreneur for most of my growing up years. He owns his own firm and does landscape architecture. And so it's funny, but that was how I grew up. And I remember specifically thinking when I was going to college, I'd go play basketball about every single day. And I remember hanging out with some of the guys that were playing basketball, some of my friends, and a couple of them were majoring in business, and then they'd run off and they'd sell pest control in the summer. And I remember thinking, what a bunch of losers. They're doing like this low level type of activity. Man, those MFers drove brand new Harleys all throughout college. They weren't working for freaking $15 an hour, $10 an hour, like busting their butt like I was all school year. They were chilling. And it's funny that I didn't put the pieces together until after I'd done way too much school. I went and got a master's degree, spent too much time and money to go and find that like there's a lot of butt kissing that I was going to have to do to try to climb the corporate ladder. I think a lot of people have experienced that. And in fact, you see it a lot today where people are incredibly disenfranchised with the idea of going to school, spending money, and then really being let down when you go to try to find a job. So the truth of the matter is nobody wants to hire you when you're new. And so how are you supposed to go get experience? Well, you got to find someone that will take a bet on you, and ideally you perform well and you can grow. But gosh, a lot of industries growth, you don't even get into into the six-figure realm until you've been in your industry for 10 or more years. And it's crazy. My wife and I talk about this all the time today, but like how are people like making their bill payments today? I wonder that all the time. The median household price in Utah is like $550, close to $600, and like with mortgage rates the way they are today, I think that's gosh, over $4,000 a month, not including taxes, insurance, HOA, all that type of stuff. So you throw that in, like you're closer to $5,000 a month plus any other bills. Like it's a lot. It's expensive. And so I think like probably many of your listeners, I just took a look around, right? I kind of saw where things were headed. I don't think things are getting cheaper, right? I really don't. I don't think that rates, I know a lot of real estate people are hoping that rates are going to come down and it's going to be this real estate boom again. I don't think that's the case. And we can talk about that more too. I don't think that things are magically just getting better all of a sudden sometime soon. And I don't think that it's wise to plan for that. I think it's much better to plan and say, hey, if things continue the way that they currently are, how can I get ahead? And so I just did the math. I started looking around, and that's where I really was led to real estate. And I listened to all sorts of podcasts and shows kind of like this, read books, and people were like, hey, if you want to get wealthy, go into real estate. So I did, and did some really cool things there. We were really blessed. But man, like it was just slow. And there was so much, this roller coaster ride of deal flow, and like you're only as good as your next deal if you're flipping and wholesaling and you're doing that type of thing. And so people are like, well, go and do that. And then you graduate to rentals, to the passive income. And people sell this idea of like, well, you get enough rentals, you live off mailbox money one day, and you sit on the beach while checks just roll in. That's a lie too. It's a lie. I know very few people that actually live that way. And I know a lot of people that have made a ton of money in real estate. Because the truth of the matter is, and this isn't right nor wrong, I think it's just a matter of painting a fair, clear picture, is that there's a lot of ways to make a lot of money in real estate. None of them are particularly passive. They just aren't. Because it's a really difficult business to scale. It's a difficult business to manage and to hire and fire and find the right talent. Like, it's difficult. Now, there's a lot of difficult things out there to do. And so the question is not about level of difficulty, in my opinion. It's about, is the difficulty that you're going to take on, is it worth your blood, sweat, and tears? Because I promise you, you know this as well as me, Jeremy, if you're going to go and try to build something for yourself, there's going to be a lot of blood, a lot of sweat, a lot of tears. You're going to be lonely all the time, and it's going to be like eating glass most of the time. It's very painful. And so is the juice worth the squeeze? That's the question. That is the end-all, be-all. Is the juice worth the squeeze if you're going to go pay the price? Here's the biggest aha moment that really led me to look at other things when it came to real estate investing, is I could build my real estate business, but it's not really a sellable business. It's just not. You could go build a flipping wholesaling team. You could go do all that. You could build. Now, property management's different. Like, that's sellable. But like, you're not getting multiples, typically big multiples on that type of business in real estate. It's typical that you're not going to sell a flipping wholesaling business for some sort of multiple. And if you were just in an industry where someone would pay you for your business when you retired or you wanted to pivot, it's insane. Like if I would have taken my business where we were doing, a few $1,000,000 a year, and I could have flipped that. Like it's pretty common that if you're netting, $600K, $1,000,000, a couple $1,000,000 in other industries, you can go get a 2, 3, 4, 5, 6, 7, 8 plus X on that, on the net revenue. And I was like, holy cow, I could have spent this time building the business, making this same revenue, and I could exit right now for like $5+ million, but I just chose the wrong industry. So I can't do that. And that was really painful. Like that was so painful. It was so painful. And so like it really puts you in a position where you take a look around and you're like, man, what am I actually building and what's important to me? And that's where I said, hey, I need to do something different. I at the time was feeling kind of burnt out with real estate. There's a lot of great things that can be done, but I just kind of got disenfranchised with all of these problems that I just discussed. And so I said, okay, where can I get better upside? Where can I get kind of the same predictability that I can get with real estate? I can apply the same skill sets, because that's the truth of the matter. Like if you're a real estate investor building a real estate investing company, you are the asset, period. You're not going to probably sell your business, but you're the asset. If you can cut your teeth and make some money in real estate by building a real estate business, you can do anything. I will go to the grave feeling that way. You can do anything because it can be incredibly difficult. And so I looked around and I said, what would happen if I just took these skills that I built and I just applied them somewhere else? I'd seen some of my friends get incredibly wealthy from crypto. I'd had some nice runs myself. I treated it kind of like a casino. And I said, what would happen if I just like actually spent some time here? Because there's something really going on, and this isn't what happens to everybody, but you're looking for signs, right? Or at least I am. I'm looking for signs for God or the universe to like guide me. And so I prayed. I said, God, I'm going to put some energy in this direction, and if this is good, just like throw me a bone, show me the way, show me the money. Let's do this thing. And so I just started dinking around. I was fortunate at the time. My team was running the real estate business for the most part, and so my time was pretty free. And so I started digging around in digital assets. Within about 3 months? I think it was 3 months. I had put some money into this really cool passive income play on the blockchain, and I started making a lot of money. Like the return on my money was stupid. And so I just worked the math backwards. In fact, I bet a lot of your listeners have been here, whether it be crypto or some other thing that they found that was cool. And I just started doing the math backwards. I'm like, man, I'd really like to make 20 grand a month. If I make 20 a month, like I'm chilling. I'm good. It's not like crazy, but like that's really pretty comfortable for my family. And so that's what I did. I went ahead and within just a few months, the math I did was 100 grand. If I could put up 100 grand, I could make about 20 a month is what was happening. And so I did. I put up the 100 grand, and then I didn't factor in any appreciation into that. So I started making 20 grand a month, and then 35, and then 45, and then 50. And, you make 50 grand a month on 100, you start to pay attention. So it's pretty incredible. Yeah. So, like after I'd tasted that, like I was hooked. It was over. I was in, and that's what we've done ever since. So, there's going to be times where you win, and there's going to be times where you learn. And there's a lot of things that with crypto that like I'm disenfranchised about. Same as real estate. Once you learn the game, you try to like actually see how things work. And so now we focus our time on the things that work, in my opinion, things that don't take tons of time. I'm not trying to chase the next meme coin. I'm not, doing all this craziness that truly is jumping into a casino. I want to treat it like a real asset class and go to places where I can win by treating it that way. And we've developed some pretty cool systems that help us and our members win in some really big ways.
Awesome, man. All right. So Dane, I want to take a minute here and appreciate the fact that this is about to be a real conversation. So obviously like I'm in real estate, but we're the investor semester, right? Investor meaning could be broad things. It could be commercial assets, whatever it is, doesn't matter. But you said a couple of things that I want the audience to be very clear on. You said that you will never, ever be able to, be able to retire on a beach off of passive income. And I'm going to just push back on that for 1 second. This is where I'm very clear with all my students. You will never retire on a beach by getting a few single family homes. But 10 years down the road, when those properties have appreciated and the principal has been paid down, and now you've got hundreds of thousands of dollars of equity that you can then move over into another asset class, into, let's say, a multifamily property that has 30 plus doors. That's typically where more investors start to retire. It's not the first round of property acquisition. It's the second round. It's once they've actually like reinvested the equity they built into something that's more tangible. And so I'll say that to the audience right now, guys, that I'm not even at that retirement place yet. I'm still hustling. But you know what is awesome is that my wife is retired, right? Like my wife is staying home with my kids now, and like we're actually starting a family. And like that's kind of like, you have to look at it as like, what's the ultimate goal? The ultimate goal, you ask yourself, like, what's your why, right? And some people say, oh, why? I want to, have generational wealth and blah, 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 blah. And for me, my why is that I'm going to be able to pass down qualities of leadership to my children that are going to help build businesses and help build relationships for generations to come. And that was something that my parents never taught me. And so for me, my why I keep pushing through this, and I'll admit there's times that I go, ooh, this is hard. Like this, that lead that I've been talking to for 6 months and we got them under contract, and now we find out there's an encumbrance of some type of lien that we didn't know about, and it just kills the deal entirely. It is an emotional roller coaster. And some of us can push through that. Some of us love the brain damage, and some of us pivot towards crypto. And it's funny, I was talking to Dane about, building out a wholesale business again. And when with creative finance, one of the worst things about creative finance, and I'll be very clear, guys, I don't sugarcoat my stuff. The worst thing about creative finance is that when you start to build a team of acquisition people and you start talking about creative finance in front of them, you've just essentially poisoned your own acquisition team, because now they've stopped giving cash offers. They want to go down the path of least resistance. So instead of trying to lowball somebody 50% of the value of their property, they go, well, what if I can take over your mortgage and pay you even more? And what we've done, we've essentially lost the leverage of giving a cash offer first. And then eventually those acquisition people, once they've learned creative finance strongly enough and they go, why do I need you? They go and they leave and they go do their own thing. So it's this endless cycle. It's this endless battle. And there's just going to come a point where you go, you know what? I've done this enough. I've done this long enough. And that's why some people get into software, SaaS, software as a service, and they start to sell a CRM or something like that. But you, just as Dane said, again, full transparency is a wholesale operation is really not sellable. There's really no ability to scale yourself out of it entirely. I mean, sure, you might be able to get a director of operations in there and stuff like that, but you're always going to have a hand in it in some form.
Yeah,
and,
I think of all the people,
yeah.
that I know as far as like truly, because everyone pitches this idea, right, of like one day you could hire your team to run your wholesale operation. Of the people that I know that are actually like have actually pulled that off, and I know a lot of them, I think I know two. I think I know two out of like thousands of real estate investors that I have in my Rolodex. I think I know two that have actually pulled that off. And the one is jumping back in right now because some things went south. So like it's an incredibly difficult business just to outsource, to your point. So those are like, that's the numbers that I personally know.
Yeah, exactly right. And so guys, so what Dane was talking about, I don't want you to get like all disheartened and be like, oh, I'm giving up on real estate right away just because of what he said. But I want you to be very clear by listening to this conversation that we're about to have is don't let this be a shiny object. Just let this be another opportunity that just like Airbnb, just like, midterm rentals, or right now the new hot topic is co-living, right? Pad split. I'm sure, Dane, you're seeing that. And for me, I'm a huge negative supporter of pad split, not pad split the company, but the co-living. And the reason that is because, a few years ago when the gurus were teaching you can take properties over creative finance with 2.5% interest rates, that was a really great selling point for that coach at the time. And now we are 3 years past the 2.5% interest rates. And now we're in the 6 to 7 to 8% interest rates. So if you're taking over a property subject to with creative finance at that interest rate, guess what you're not doing? You're not cash flowing. So the only way to make that possibly cash flow is by turning a 3-bedroom house into a 9-bedroom motel and trying to find people that are going to rent it month by month. And hopefully your vacancy is going to stay low. And again, I'm not a supporter of that. I'm a very conservative investor, which is also probably another reason why I haven't gotten into crypto, is because it scares me. The gambles scare me. And if I go back in time, I'll go back in time. Let's go back 10 years. Kind of a little bit of my origin story, which I'm not going to get into, but I was high on painkillers. I got into a really bad motorcycle wreck, and I think, Dane, I've told you the story, but I was broken off for a couple of years, and money that I had saved up, I started investing in the stock market. And I started, instead of looking for consistency and, blue chip type stocks, I was going for the medical, the techie stuff, and, the medical, oh, this was just approved by the FDA. And like, I'd have a big hit, and then obviously I'd lose a lot of money. And I think I lost a little over about $350,000 in a matter of a couple of years by the investments I was making. And I was still playing around in real estate, but looking back at it now, I made a rule that I said, I'm not going to gamble my money away. I'm going to I want to set up a future and a retirement for myself. And even if I have to hustle for the next 20 years, locking up more properties, at least I know my portfolio is growing. And technically speaking, if I were to sell my portfolio right now, I'd have a few million that I could probably put into crypto. And hey, Dane, let's have a conversation about what that would look like. So anyway, bro, all right, take it away. Let's real quickly.
I think to be fair, the conversation. So what is real estate good for? And I think this is really important to understand. So once again, this is my opinion. There's a million ways to make $1 million in real estate. Everyone's got a different opinion on what they like and what they don't like. Here, in my opinion, is what real estate is great for. You won't find a much better tax incentive, especially if you're, you got to do your own due diligence. I'm not a CPA nor a financial advisor, yada, yada, yada. You get all the disclosures. But man, if you can qualify as a real estate professional for tax purposes, there are pretty much no better tax incentives out there to be able to mitigate your taxes and have assets, buy assets instead of giving your money away to the IRS. So real estate's phenomenal for that. I think that it's a really good place to protect income, like you're saying, Jeremy. Like, you're not going to have huge swings in the real estate market, especially if you're not in, frickin' Arizona or New York or Florida. Like, it's going to be typically a lot more consistent. So it's really good for that. And I think that if you're taking a longer term approach, like that's your slower money bucket, I like it a lot for that. I like to, in fact, I talk about this a lot. You should have like a fast, a medium, and a slow money bucket. The problem with a lot of people is they go to the slow stuff, and it puts a lot of people out of business because they're putting so much money there and they don't understand, hey, this is like a 10 to 15 year buildup before it starts to get interesting. In fact, my one buddy that I know that smashed it, I think he just sold half his portfolio for like $60 million a couple of years ago. He's been able to do that because literally for 20 years, they've been building a rental portfolio. They've been using his wife's income to pay their day-to-day bills, and literally all the money gets recycled back into the real estate business. And so like that's what it takes, or it could take, an example of what it could take to really go smash it over there. And so, you just, once again, I don't think there's a right or wrong. I just wish that I had a better understanding of what was on the table, what was possible and likely when I stepped into the arena, so that I could make the right decision for myself.
Yeah, no, absolutely. You mentioned taxes for a second, and I don't want to talk about this very long, but you moved to Puerto Rico, right? And let's talk about taxes for a second. Like, what brought you there? And it's funny when we see there's other investors. There's like, Jerry Norton and Robert Wensley, and there's a few other bigger players that have moved out there. And I think you guys probably all lived in like one gated community.
And they moved away
right?
since
like that,
because
right?
Puerto Rico is not a nice place to live, and I moved away too, just barely.
So real quick, just tell me real quick, what brought you to Puerto Rico? Was it the draw of saving on taxes? Was that a shiny object? Did you think you needed that? Just like how some wholesalers they think they need an office space. Is that what you thought?
One of the nice things about real estate, right, is you can buy and get tax incentives, and you can offset your income in a big way there. With things like crypto or stocks, right, there isn't that. So when you sell, like, you are on the hook for all of the taxes. There's no way to I take that back. There are some really cool ways that we've developed to be able to offset your taxes with digital assets. But like for most people, there's not a great way to do that. Scenario, you're going to be on the hook for 20 to 40% typically. And like that blows. Unless you move to Puerto Rico, and there you can have no capital gains tax and only 2% corporate tax if you have a business. So like that's as close to no taxes you can legally pay without depreciation as a United States resident, period. That's it. You see a lot of these guys that talk about tax structures in the Cayman Islands and things of that nature. Look, it doesn't matter. If you're a United States resident, you're supposed to pay taxes no matter where your business exists, no matter where you may spend your time. Like, you're supposed to pay taxes the same as everyone else, whether you live here or not. So your options are to get rid of your citizenship, move to another country. It's difficult to come back if you've done that. I've done the whole deep dive. So it's difficult to come back if you do that. It's messy. In my opinion, that's that's like a lot to give up. You move to Puerto Rico. You pay California prices like the Hamptons. You pay those types of prices for the places that you want to live. And you live in a place that is third world in a lot of respects. And it's painful. So, like, if you're willing to pay 10 times more for the same things that you might be able to get for where you currently live in the United States, and you're comfortable doing that for a third world experience in many respects, then Puerto Rico's for you, like, by all means. But you cannot beat, the one thing I have to say, you cannot beat the network in Puerto Rico. Like, I met some of the coolest people. It's common, like, some of the pools we'd go swim at, like, you're there with ball players and movie stars and hedge fund managers and people doing, like, some really cool stuff. So it's hard to beat the community there. And that's, in my opinion, the best thing about Puerto Rico. Or your third option, right, is to live wherever you're going to live and find ways to be able to offset taxes. If that's something that's important to you with real estate or solar arrays or oil and gas or business, like, there's so many ways to do some of that. It's just important to have a plan and then, like, go and execute your plan. I specifically watched a video before we moved to Puerto Rico where this guy was like, it wasn't worth it for me. I figure I'd just make money instead of focusing on, like, saving money from taxes. And I just like the lifestyle. He was in Miami. I like the lifestyle better in Miami. And I was like, yeah, maybe. And I wish I would have listened to him. So that's my 2 cents on Puerto Rico.
I love it. So Puerto Rico, AKA the long distance country club. All right, perfect. So, all right, let's get to the brass tacks of things. What exactly do you consider to be a digital asset, and how can real estate investors start thinking about them more as a long-term wealth strategy or more of like a medium? Obviously, we don't want to go to Vegas. We're not here to gamble. We're here to actually talk about real investments.
Yeah. I mean, I think there's actually a lot of similarities to real estate, right? So I think everybody talks about, hey, if I could have gone back and I could have bought houses in the crash in 2009 and 10, 11, and 12 and just held on to those, I'd be retired by now. And that's true, frankly, kind of any asset class. Like, if you can train yourself to buy when everyone's freaking scared and the future is uncertain, and you can choose to sell when everybody's in now and it feels like things are just going to continue to go up forever, you won't help but make money. Like, facts. You won't help but make money. It's funny, 2 years ago, so I sold my personal residence, like, at the top. It was perfect. Like, interest rates started to creep up again, and I was like, I think this is it. I think we should sell. And that's when we did. We moved to Puerto Rico. I sold the perfect top there because I was willing to sell when there were some indications of, hey, the market's changing, and everybody still thought that, like, things couldn't help but just continue to go up forever. Now, the difference is the degree to which those opportunities present themselves. So if you would have bought real estate in 2010, and you'd have bought, let's say you bought the perfect bottom. So you could buy a house here in Utah for frickin' $50,000 at the auction. That thing is worth, like $500K today. It's great. It's a 10X. You 10X'd your money in, what is that? 15 years. Like, that is phenomenal. 10X, 15 years, phenomenal. But also, like, those opportunities in real estate don't come around that often. Like, you're not going to get a 10X in real estate every 15 years, typically speaking. And so the question in my mind is, okay, if I'm going to focus on opportunity, where can I, like, have big opportunities that I'm not jumping into the casino and just hoping? And that's where, like, the conversation's really easy to move to Bitcoin. We could talk about that ad nauseum. I'll keep it really simple. Like, your listeners have heard of Bitcoin. They've seen some of the returns. Here's the fact of the matter is people like JP Morgan Chase, Fidelity, BlackRock, Donald Trump, I mean, anyone who's anybody is getting into crypto, period. They've been doing it for the last few years. The big institutions are getting in. Like, if you don't think crypto's here to stay, you're crazy. You're absolutely crazy. It's here to stay. That's a fact. In fact, you're even seeing a lot of the governments around the world actually start to build Bitcoin reserves, because the truth of the matter is we lose buying power every single day in fiat currency. It's just like the dollar, the yuan, or the yen. the euro, we lose buying power. And so where you're not losing buying power is traditionally Bitcoin. If you can get in and just be a little bit patient, Bitcoin goes up for 3 years, down for 1. And this cycle, if you were to buy the bottom-ish around 15, 16K, I mean, right now you're up, what is that? Not quite a 10X, but fairly close to it in a matter of like 3 years. So where are your opportunities? I mean, and that's why I love digital assets, because the bang there is so significant that literally, like, you could change your family tree in just a few years being more conservative. And, you could do it a lot faster if you hit some wins on some smaller stuff, but that's more gambling. And so I tell everybody the same thing. If I were to approach digital assets again, to me, that's like Bitcoin, Ethereum, everything that's cryptocurrency. If you look at Bitcoin and you keep it really super simple, Bitcoin once again goes up for 3 years, down for 1. Theoretically, the next Bitcoin top should be near the end of this year of 2025. And then there will likely be a big giant fear event where there will be uncertainty at the end of 2026. And that's where, frankly, I'm going to be swooping up and buying everything that I can absolutely get my hands on. And then from there, then you increase your risk as you're stepping outside of that. So Bitcoin to me is like one of the best assets ever, period, known to man that there is. And governments and big guys are getting involved now. I think that it's absolutely here to stay. And so I think that's one of the most sure bets that people can make. And then, like I said, as you step away from there, now you're starting to enter the casino more type of thing. And so super boring approach, but Bitcoin first. And from there, there's some really cool passive income plays and things of that nature we can talk about too if you want.
Yeah, I want to talk about that. But I have a number of like questions I wrote down, and then now as you're speaking, I'm like, shoot, I've got another question that I want to ask, and another one, and another one. All right. So when you're looking at like different types of, digital assets, like Bitcoin, for example, I know there's Ethereum, right? And there's other plays like that when you're analyzing these assets, are you looking at them as like the way I would look at like Google and Apple, and they're all like maybe blue chip type stocks, but they all offer different types of products? Or like with Ethereum, I know it's got to have some draw to it. I don't know what that is. I also know there's Dogecoin that has no draw, yet it also goes up in value, or maybe it doesn't, or maybe it does. And then you also, in the total side of things, which I'm assuming is also always a challenge for you, is that you got the NFTs on the other side of is that like the redheaded stepchild? Is that, do we not talk about that? Do we put that under the stairs and just like lock it away right now? Because I mean, what was it? Like $800,000 for a picture of a monkey, right? So anyway,
so I mean, you nailed it, right? I think of the stock market as a really fair analogy, where you've got like your blue chips where you feel, the most secure about those things. And that could be attributed, call it like top 10 currencies, Bitcoin, ETH, all that type of stuff. So those are your blue chips. And then as you move outside of that, now you got, penny stocks, you've got more speculative things, and you can make a ton of money. Like, we've had people like Eric in my community, he turned $3,000 into 400K in 5 days. Like, those are some of the opportunities with some of the, like, if you want to say penny stock type of things on the blockchain, like there's those types of opportunities. But they're rare, right? They're rare and they're hard to catch, and it takes time and energy and all that type of stuff. And so I think that if anyone's looking at digital assets, they should do a couple of really simple things. They should first ask themselves why digital assets. Second, they should spend a little bit of time, doesn't need to be a ton, just to like jump in and kind of learn what their goal is, right? What's their goal? Why are they getting involved? And then develop a plan and stick to the plan. Like, legitimately have more than, I bought this thing because I saw it on YouTube or TikTok or Twitter, and I just think it's going to go to the moon. Like, we speak all the time at real estate events. It's hilarious to me. And I go through this thought exercise and I say, hey, raise your hand if you've ever done a real estate deal. A bunch of hands go up, right? Raise your hand if you had a plan going into that real estate deal beforehand of how you were going to execute the deal and make money on it. Most hands stay up, right? And I say, great. I said, and how many people actually made money on those deals? Like, raise your hand, keep your hand up if you've made money on a deal before. And most of those hands that have been up, they stay up, right? And then I say, how many people have bought crypto here before? Most hands go up again. I say, great. How many of you actually had a plan going in like you did with real estate? pretty much all the hands go down. And they say, great, how many people lost money in crypto? All the hands go back up. So like, it's the same thing. I'm telling you, like with real estate, you are the asset. Your same skills that you've built there, they apply elsewhere. You just want to apply that same logic. And so same thing with crypto, like I think that you probably, if you're coming in, you should understand the time frames. Once again, Bitcoin up for 3, down for 1. So, I'm not a financial advisor. You make your own financial advice, but likely if you want to get involved now, there's never a better time than now. And then you should maybe consider selling near the end of this year and then buying back at the end of next. At least that's what I'll be doing. And so, you make your own decisions. And then as there's some things that change in the market, then you're looking at things that, go down the risk curve. It says, hey, it's time for this stuff now. And that's where you can go make, a lot of money in short periods of time, but with increased risk. And, you've got to make a plan and determine how you want to play that. The cool thing with our community is most of them don't want that, right? Like most people here's what most people want. We all want the same thing. We want to be able to put our money in a place. We want to see it grow in an exponential way and us do nothing for that to happen, right? That's what we all want. And so that's what our community in crypto, that's what they want. And so what we do is we have a very specific approach where we bring people in. We say, hey, based upon your goals and your money, here's some options. What is it that you'd like to accomplish here? Great. You probably want something that's more passive. Here's the plan. Here's how I would approach that if I were you, with reasonable upside, mitigating risk, being able to make some passive income as you go along. Great. They like it. We go ahead and we help them execute. If not, we can make some adjustments. But like I'm telling you, just having a plan and executing it, I've said it like 5 times, but most people don't have that. If you do that, your chances of winning go up substantially.
I would just like to put on the record out there that I just opened up my Venmo account. And like I said, years ago, I think at this point, it's probably been about 3 years, they opened up crypto investing. And I think I had about $153. And I would like to proudly say that I have $160 now. So I've made $7.41 or 4.84%. So I'm
Nice.
on the path. I'm on the journey. So let's keep this going. All right. So we talked about that, like how to find the right digital asset and whatnot. Can you share any examples of digital assets that produce cash flow or passive income like you just talked about, like similar to a rental property? Like, how does that work?
So, like if you go and you buy a rental, someone asks you a bunch of dumb questions you're going to know the answer to, and they'll be self-explanatory, but it'll make sense as we dive into the crypto end of things. So if you go and you buy a property, it probably makes sense to do more than just like buy it, sit on it, and never rent it out, never rehab. Probably makes sense to go and try to maximize that asset. Would you agree? Right. So I know almost nobody that goes and buys real estate. Let's say use houses, for example, or even commercial. Like, unless you're one of the really big boys that has a ton of money to speculate, most people aren't buying real estate and just solely waiting for the appreciation, for the dirt and the building to go up. They're going in there, they're putting in a business, they're fixing it up, they're leasing it to a renter. Like, they're doing something to maximize that asset. And most people they're doing the opposite when they come to digital assets. They're literally just like buying a property and hoping for appreciation. And that can be done. In fact, there's tons of examples in digital assets where that can be done and done really well. But once again, we can maximize those and we can do them strategically so that we're making passive income, for instance, from our assets. So we can put our assets to work. And this is where digital assets to me get really exciting. They get really cool. Because one of the things that you never become on the blockchain is a tired landlord. I've become a tired landlord. I've had properties that I bought for rentals that were incredible terms that the deal went sideways. And I'm like, man, if someone would call me right now and offer me like a few $1,000 to take this mess off my hands, I'd do it. And I would do that all day long right now because this property has become the bane of my existence. Like, if you haven't had that experience yet, it's because you haven't done enough deals, because I promise it'll happen to you if you do enough deals. With digital, yeah, you've experienced that. With digital assets, I never become that because I don't have tenants that destroy my properties. And the reason for that is because it's the computers that do all the automation on the back end. So for instance, I could take my digital assets, I could rent them out, so to speak, if you will, on the blockchain. And every time that someone uses my assets, they use my assets, the liquidity, it's called liquidity, to go and make a trade. So let's just say you have digital asset A and digital asset B that people like to trade back and forth. Well, I could be somebody, it's called a liquidity provider. I could go and put those two assets up on the blockchain. It's kind of like people renting them, if you will, and it allows them to trade back and forth between those two assets. And when they do, well, I get a little fee every single time that happens. And so my properties, if you will, my digital assets here, well, I make money from them by just like renting them out. But once again, I'm not going to have a tenant that's going to come through and destroy those because I know how to protect them. So that's a really beautiful thing where you can have a lot more flexibility that I love about digital assets. And I can give you a few other examples, but that's just one of where truly like your computer is doing the work on the back end. Once you have things set up, like you don't have to do a lot of work if you don't want to. You can literally make it as passive as you actually want, just depending on your goals and what you want to accomplish. And even if you're taking an incredibly passive approach, you can get, 90, 95% of what maybe a really hardcore full-time trader might get, because day trading and short-term swing trading, like, it's very difficult. Most people lose money doing that. And so, it's better to take a longer term approach with that type of stuff. And it's funny to say this, but like longer term in crypto is like no more than a few years typically, and then you're out. So, it's really nice in that respect.
I don't need to talk about this very much, but I know that there's crypto mining, like actually running like graphics cards and stuff like that. Have you ever done that? Is that something that you've ever thought about getting into? Is that even something that anyone should ever consider doing?
Right now, if you look at, so the reason that people do that is to mine Bitcoin. And the reason that people mine Bitcoin is because previously it's been fruitful. And you had to have enough cash reserves, because there's, once again, Bitcoin goes up for 3, down for 1. So like the down for 1, you had to have reserves to continue to mine and like cover, because you're going to be mining at a loss. It's going to take too much power, too much computational strain to be able to make that actually profitable. As Bitcoin's falling, the price is falling. I think it's roughly 90% of all the Bitcoin that have ever been mined have been mined at this point. And so with that being the case, it gets harder and harder and harder. So your GPU power needs to go higher and higher and higher, which typically takes more and more power, which makes it not very profitable. So I would say as far as actual Bitcoin mining, I'm not interested in that at all. But there is other mining that we do that, that is conservative in nature, but makes passive income. Like you could go mine Ethereum on the blockchain right now, and you could do it without your money being stuck in a third-party protocol or platform like Coinbase, where if they go under, then they take your assets. Like you could go do it in a decentralized manner, where you're going to make some passive income. You're going to put your assets to work, and literally, like, it's a set it, forget. You set it up, you just let the thing run, and then when you're ready, you come back and you get your underlying assets plus anything you've gained, and you're off to the races. Like, it's an incredible thing where you remain liquid, and you can make passive income without worrying about tenants, toilets, trash, or the city coming and posting a code violation.
Awesome. That makes sense. I had no idea that there was you said 90% of Bitcoin has been mined by this point. Like, so
you're not early to that.
I mean, I guess,
you're not early to that.
Yeah. Well, I was thinking to myself, like, it's a digital asset. You could just produce more, but no, it's actually a finite amount that that makes sense.
Yeah. And it depends on the cryptocurrency, but Bitcoin is a finite amount. There's 21,000 that'll ever be mined. Most of them are already mined. And like I said, it gets harder. We're not going to get into the boring crypto stuff, but essentially they're called epochs. And once your time frame is fulfilled, then it automatically, it's called the halving event. So it happens roughly every 4 years. The halving event occurs, and it's essentially like your rent's getting cut in half. So your GPU mining power that you were doing, if it was generating a Bitcoin a month, well, now it's going to generate half a Bitcoin a month. It gets infinitely harder. And so that's where, it's this, you're constantly chasing more computational power and computing, and it's typically not profitable.
Okay. All right. So now another question I have is, when it comes to stocks, there's a reason that there's always what's called a stock split, right? Because the stock becomes overpriced or it becomes not accessible by the majority of the public. And so they split it so that it lowers the price down to where more of the society can buy it. That's not the same with crypto, right? I don't have to have $115,000 to buy a Bitcoin. I can buy a fraction of a Bitcoin with $2.
Yeah, correct.
Like,
It's actually one of the really cool evolutions of cryptocurrencies. You can buy fractions of a coin depending upon their pricing and things of that nature. It's really cool, actually. So, kind of like you talked about before, where people are trying to fractionalize houses right now and rent out a bunch of rooms, and there's upside and downside to that. Nice things once again with digital assets. Well, rather than having to come together as a group to own a property, I can just own fractions of one without anyone else in the pie, and I'm in control. And that's one of the most important things with digital assets is you can be in control. Like, you don't have to give up control of your assets. And people are so used to that with things like, with real estate, it's really common to give your money to somebody in hopes that they do a deal and they pay you back plus a little bit. Like, we're really used to, especially real estate people, giving up our control of our money or assets or deal structure. And in the digital world, you don't have to do that if you know how to operate. And so we teach people in our community how to maintain their own access to their stuff, sole access, so they don't get scammed or hacked or taken advantage of. And then you go and you can do, you can execute your strategies that you feel good about, that you feel right about. And so there are examples where some cryptocurrencies are built where they could do like stock splits and things of that nature. You just want to be aware of what you're going in to buy and how it's built to operate. But there's also things that are really cool, kind of like stock buybacks. So a company can buy its stock up, increasing the price, and the users are happy when that occurs, right? Or there's even some companies that will like have some portion of their revenue set aside each year that they do stock buybacks back, pushing up the price for the shareholders. There's things that work like that in cryptocurrency where the founder will actually come in and scoop up and buy up the price and do it sometimes in really big ways where it can be incredibly profitable. And those are some of the places that I currently hold quite a bit of money in, is because I think that those buybacks are coming, if you will, and I think that it'll push the price up exponentially high where we'll make a lot of money.
I love that. All right. I obviously can probably keep asking you questions for the next 4 hours. So to keep this episode somewhat manageable, what else would you like to talk about? Is there anything else top of your mind?
Yeah, let me get some basic things where people make mistakes all the time and people can protect themselves. So first things first, you need to understand that when you're going, let me start with an example. This will be easier. So Jeremy, have you ever been to a country outside the United States before? Give me an example.
I have.
Perfect. What
Thailand.
was the currency that they used there to transact?
They use the baht.
Okay, cool.
The baht.
And when you went to Thailand, I'm assuming that you had to trade some dollars for the baht to be able to buy goods and services. Is that accurate?
That exchange rate hurts,
perfect. So
yes, I did.
So when you went to Thailand and you went to swap your dollars for the baht, where did you do that? Like, there's a few different places you could. Where'd you make that swap?
Well, I know you're trying to make a point, but I first tried to do it through my bank and I got completely ripped off. And then I actually found some currency exchangers it was actually cheaper to bring my US dollars to Thailand and do it in person there. I got a better exchange rate. But when I did it through Chase,
they rake you over the coals. Yeah.
Wow, I got bent.
Yep. Totally.
Yeah.
So that was great. I found the same thing. If I take my money direct to the source, not a third party or a middleman, you get a better deal. So we'll use that in this analogy. That'll actually work out really well. Cool. So you went to the money exchange, you swapped your dollars for the baht. What'd you do after you made the swap? Did you leave any of the money at the currency exchange, or did you put it in your wallet and take it all with you? Of course, right?
I took it all with me.
Because you want to be the one in control of your money. You don't want to leave it behind. And so one of the biggest mistakes that a lot of people make when they jump into crypto is they essentially go to the money exchange like you just did, but they leave their money there. And they say, I hope you guys treat my money well, and I hope that you don't lose any of it. And there's so many examples of that being a terrible idea. So what that looks like is this. When people go and they jump into crypto, they're usually using a Robinhood account, a Coinbase, a Kraken. It doesn't matter. Take your pick. They're pretty much all the same, at least in terms of the disclosure that you sign when you set up your account. You click yes on the page as you're setting up your account. You're agreeing to all these terms. No one reads it. And essentially, one of the clauses in there, multiple clauses, essentially indicate that, hey, if that company goes bankrupt, well, guess what? Your assets, you're agreeing that they can claw your assets back, liquidate those assets, pay back any of their creditors, and if there's money left over after paying their creditors, they'll give you back the crumbs. And that typically happens every bear market. Once again, Bitcoin up for 3, down for 1. During the down for 1 is when you really see who was wearing shorts as the tide goes out, and many people are not, including a bunch of these exchanges, and they go bankrupt. And the users that left their money at the money exchange, well, they lose their money. Some of them get some of it back, some of them don't. And so what you want to do is we want to treat Coinbase, Kraken, Robinhood, we want to just treat them as a money exchange, where that's a great place to turn your dollars into crypto, but then you want to take your crypto with you, want to put it in your own wallet, and you want to be the one that's in control of it. You're the one that's in charge. So if Coinbase, God forbid, goes bankrupt, well, it doesn't hurt your assets because they can't seize them because you took control of them. So that's the first thing. That's the first thing that everybody misses that I think is incredibly important.
So, Dave, real quick, you're telling me that I should take my $160 out of Venmo and I should put it into a wallet right now?
You want to make the juice worth the squeeze, right? Like, if you're going to go send it somewhere else, like, is it going to break you to lose $100? No, it's not. But when it starts to get more substantial, where it's something that's like meaningful to you, or like, gosh, if I lost this, it would hurt a little bit. Yeah, you absolutely should. You need to just take the extra step of moving it to your own wallet. I really like, there's the OKX wallet that I'm using right now that I like a lot. It's free to download. It's easy to use. You can send your money from Venmo, Coinbase, Kraken, Robinhood. You can send your crypto over there for almost free, super quick and easy. It's not hard. It's just a matter of knowing how to.
And that's stored on a hard drive, I'm guessing, local on your computer?
So that particular wallet is called a software wallet. So it's just a Chrome extension in your Chrome browser. It's a browser extension. And that browser extension is solely associated with your browser on your device. So you have that. You send the money over there. It's going to give you, this is my second tip, is if you're going to take this additional step, it's going to generate what's called seed words, which is essentially just like a master password. That's all that it is. It's going to typically be 12 words in a certain order, and you want to make sure that you protect those words as if they are sacred. If you're sending money to a wallet and it's yours to be in control of, you need to protect it like you're a bank manager and you're protecting the money that's there. If you're going to protect the money that's there, well, you're probably not going to take you're probably not going to take a screenshot or a picture of the code to get into the bank vault that holds everyone's money, and like that's how you'll remember it. You're probably not going to do that. You're probably going to be a lot more wise and secure about how you protect the password to the bank vault. And similarly, you want to do the same with the seed words here. So the second mistake I see happen all the time is people will take a screenshot, a picture, they'll copy and paste it into a password manager. They'll take these words and essentially do something digital with them. And if you do that, you are at risk of someone hacking your devices and stealing your money. Because if they hack into your computer and they get those words, well, guess what? They have access to everything in your wallet. And so that's a problem. So rather, just keep it super simple. When you get those words, I know this is boring and old school, but you just write them down with a pen on a piece of paper. I like to have two copies, put them both in Ziploc baggies, put one in a safe place in your house, one in another place that's separate from your house. So if God forbid something happens, fire, flood to your house, you have another copy elsewhere so you can access your crypto if something were to happen. Once again, this is when you start to get like enough that it matters, where you're like, hey, I need to protect this. It's worth enough. So that's what you want to do.
Real quick. So I literally, this is 2 days ago, I saw this. I saw an article, some dude holding a hard drive. And you may have seen this recently, that like he threw away a hard drive years ago that had something like $800 million of Bitcoin on it. And he actually he scavenged through a landfill apparently. And I mean, when you know you have $800 million in Bitcoin on a hard drive, maybe you spend the time to start sifting.
Well, he's been doing it for years. They've been sifting through the dump for years in hopes of finding it. And yeah, no luck. So yeah, to your point, that was kind of like an older iteration. So when Bitcoin was new, yeah, you'd store it on hard drives and things of that nature. Today, there's a lot simpler ways to be able to secure your crypto. You know, you're probably not keeping it on a hard drive today. There's better ways to store it that are more manageable and safe.
Got it. Got it. Okay. So those are two great points that people make mistakes. Is
Oh,
there
man.
a third?
Yes. The third thing, in fact, these are the three things. Like, these are three. If you can do these three things well, you'll pretty much keep yourself where you're not going to run into too many problems. The third thing is, I guarantee that you're going to get messages of people DMing you about crypto at some point. If someone is proactively reaching out to you, it's a scam. It is. Every time. I've never seen someone proactively reach out about a crypto opportunity and it like be legitimate. And I've talked to so many people. In fact, we talk to people every month where they got scammed or hacked or they gave their money to someone that promised they were going to grow it. It's never legitimate. Never. You will never get an email, a direct message, nothing. And we're all programmed to like, hey, you get something, you should check it. If it's crypto related, just delete it. And we help our members with this all the time where we're like, hey, we're the backstop. If you ever have any questions, concerns, like just come say, hey, I got this text, this email, this DM, and we'll cross check it. But assume it's a scam because they pretty much always are. I had one of our members, she got complacent, she didn't listen, and she had somebody on WhatsApp Messenger and show her these screenshots of how they were trading crypto and making all this money. She took her kid's semester, the next semester of school funds, and give it to these guys so they could go and grow it in the meantime. Of course, it was a scam, lost it all, and she's devastated. And so, like, don't let that happen to you. You can do it by just, like, being wise. Yeah. If a stranger reached out and knocked on your door and said, hey, I could double your money tomorrow night, you probably would say, man, that's probably a scam. It is in crypto too. Yes.
All right. So just be clear. So what I was envisioning, I was thinking like more like the upside down world in Stranger Things, where in real estate, we get fake accounts that try to sell us on crypto, right? They're like, I get that people impersonating Jeremy Davis all the time, and people are sending me DMs saying, hey, Jeremy, are you trying to sell me on crypto? I go, no, that's a fake account. Now, what I was wondering was, on the crypto side, do people try to sell you on real estate, or is it still crypto?
This was another big aha, and this is one of the reasons we went over to crypto too, is, dude, like the crypto people, they want real estate in a big way, or many of them do. And that was a big aha moment as I said, hey, there's some really unique synergy here between these two asset classes. The real estate guys, they love the booms when they come, but like they're oftentimes short-lived or shorter-lived. And so they want something, back to the idea of like fast, medium, and slow money. If you're in crypto, like that's fast money. That's the fast money bucket. And they're looking to diversify and put some money into more medium and slower buckets to be more diversified. So the crypto guys, many of them want, especially the bigger money guys, they want assets like real estate so they can be more diversified. And I think that, frankly, the crypto realm is one of the most under tapped into demographics there is as far as capital raising is concerned. That's one of the reasons we're over there. And gosh, if you can crack the code on that, there's so much money to go do deals there, especially come near the end of this year. People be looking to do stuff. It would be crazy not to be looking at it.
Awesome, man. Well, is there anything else you want to go over, or maybe
yeah, absolutely. So we have a community that we run. We've helped people like Eric turn $3,000 into $400K in 5 days. I have multiple people that have turned a few $1,000 into tens, if not hundreds of thousands of dollars. With people like Tyler, that was a real estate investor that came to me. His goal was to go level up and move to commercial, but he didn't want to go and necessarily take on bigger deals with more headaches, more capital outlay. And so we showed him what we were doing on the blockchain. Tyler took a rental property that he had $200K in equity in and was making $700 a month. And with our strategies, he took that $200K, sold that rental, put it on the blockchain. Now makes $10 to $15K a month instead of $700. And so we help people do this stuff all day long, where it's not somewhere where most people should go all in. Like, you should probably keep doing the thing that you're already doing well, that's paying the bills. You should keep doing that. But gosh, you should have some sort of plan where some of your investment capital is going to digital assets, and you're doing it in a way that's very strategic, very smart. You don't need to go all in, but you have a plan, because once again, the governments of the world are getting involved. The big bankers are getting involved. Like, it's here to stay. This is one of those opportunities where, like, you will look back and your grandkids will ask you, hey, did you get involved in that digital asset thing that I hear about today? They're telling me in history class, and you have the opportunity to say, well, no. and we're poor because of it, or yes, I took some swings, and literally you could change your life in a very short period of time. So if you guys like stuff like that, you can come find me over on Instagram, just at Money Talk with Dane. Send me a DM. I'd love to connect with you, and we can see if we can help, right? If we can help, love to do it. If not, I'll send you some other resources, send you on your way. We specifically work with investors, with entrepreneurs that typically are making about $150K or more per year. They've got a few $1,000, typically $5K or more to be able to go and like start with, to play around with. If that's you, we'd love to talk with you.
And to be very clear, guys, Dane also works with a very, very well-established real estate investor, Corey Geary, who many of you might know. He ran Novation Nation for a while. That was Corey's, right? Yep. Novation Nation, I think it was. Yeah. So Corey's been doing this for a long time. And so guys, like I said, bringing in Dane to have this conversation, this is all about education. And for me, even like getting a credit card that has cash back, for example, that's going to be something that I'm going to start investing into crypto. And Dane's going to be there to kind of help guide me along the way. And so again, guys, when it comes to crypto, I'm not an expert on that. And so obviously if you're going to be diving into that and getting interested in it, be safe, but work with somebody that has your interest in mind. And that's why I brought Dane on this conversation. He's not like the gurus out there that are trying to screw you over and just take your money. Like, he wants to make money with you and stuff like that. So just the same way as I am with real estate, I want to do deals with you. Dane is the same way. He wants to be able to make money with you with the thing that he is passionate about and loves. So guys, we'll also put the link for his community in the show notes as well. And I'll put that on my YouTube in the description. And guys, Dane, I want to say thank you very much. And we're also going to get Corey to come on here very soon. Yeah,
you'll like
right?
Corey's story. He and I are very different. And so I'm the calm one. Corey is like full of energy, has a crazy story. Like, that'll be a fun episode.
I love it. All right, guys. Well, hey, you've all been listening to the Investor Semester podcast. Do not forget to subscribe, leave a 5-star review, and please tag us on socials with your biggest takeaway. We'll see you on the next episode. But until then, keep grinding, keep making offers, and for God's sakes, call your leads. We'll see you guys next time.